Accounting and finance are two closely related fields that are essential for the success of any business. Accounting is the process of recording, classifying, and summarizing financial transactions to provide accurate financial information to the stakeholders of the business. This information is then used to prepare financial statements such as balance sheets, income statements, and cash flow statements. On the other hand, finance is the study of how individuals, businesses, and institutions manage their money, and the process of acquiring and allocating funds to achieve their financial goals. Finance focuses on the analysis of financial statements, investments, and financial markets to make informed decisions. To understand the difference between accounting and finance, let's take an example of a business that wants to expand its operations by opening a new branch in a different location. In this scenario, the accounting department would be responsible for keeping track of all the financial transactions related to the new branch, such as the cost of the lease, the salaries of the employees, the cost of equipment, and other expenses. The accounting department would then prepare financial statements to show the financial performance of the new branch. On the other hand, the finance department would be responsible for assessing the financial viability of the new branch. The finance department would analyze the financial statements prepared by the accounting department, along with other factors such as market conditions, competition, and potential risks, to determine whether the new branch would be profitable. In summary, accounting focuses on recording and reporting financial transactions, while finance focuses on analyzing financial information to make strategic decisions.